We can start, I guess. Today is gonna be us guys, me, Polina, Alex, and Thomas. So once again, as it was announced previously in the economic data release, we're going to discuss the ADP non-farm employment change. So I would like to remind you that job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. ADP provides payroll services to U.S. corporations, and they analyze data from around 400,000 customers to derive employment growth estimations. So as you can see, the current moment, the forecast for November is 200,000, and the previous was 215,000. Last week, U.S. first weekly jobless claims report in 2014, a 339,000 increase in the number of new claims for unemployment benefits. The figure was broadly in line with market consensus and was down 2,000 claims for the prior week. The U.S. private sector employment market added 215,000 jobs in November, exceeding forecasts of a 172,000 increase. Hiring picked up since October after a sharp upward revision, reaching an 184,000 job gain. This event is usually overshadowed by the major non-farm payroll support from the U.S. Labor Department, but the upward trend increases optimism among economists. Moving on further, it is possible, yes, it is, or not. Oh, sorry. Yes, it is possible to see the economists surveyed from different banks and firms around the world on the estimate for ADP non-farm employment change. So taking into account this data, the median estimate is 200,000, average estimate 198,000, high of 225,000, and low 170,000. And the data is based on 35 surveyed experts. And as you can see, I would like to quote Michael Carey, an America's chief economist and Credit Agricole, on the matter. So our non-farm payrolls forecast for 200,000 gain in December, with the unemployment rate rounding to 7.11%. Employment-related information released so far this month is consistent with a continued moderate pace of hiring. The December consumer confidence report suggested slight improvements in the labor market, with fewer people reporting jobs as hard to get and slightly more reporting jobs as plentiful. The employment component in the Dallas Fed's Texas Service Sector Outlook survey moved higher, pointing to solid hiring in the private sector services. The ADP employment report released today will round out the set of data we input into our forecasting models, and we will look at revising our forecast if this report come in far from expectation. In household surveys, we look for the unemployment rate to move up to 7.1%. Employment gains will likely remain positive, though we expect a more moderate pace following November's 880,000 employment gain. We anticipate that employment gains will be offset by gains in the workforce, causing the unemployment rate to around 7.1%. And moving on to the fundamental aspects, talking about the impact on the U.S. dollar Japanese yen that was provided by our lovely FX community members. As you can see that the answers were quite bullish this time, 55.81% bullish and 44.19% bearish. And one of our traders who had a bullish comment said that for two readings in larger number of employees. I think that the rising trend continues. Perhaps this is affected by the holiday season. Also, this parameter is used for a lot of unemployment Fridays. And a bearish comment by Jiz, after a really, MCN has that word, good result, this is a little above realistic. I see some results around 180,000 and a downward direction of the pair. And I guess this is all from my side, and now I would like to give my word to Thomas, who will provide us some technical stuff on the matter. So, Thomas, my word to you.
Thank you very much. However, my platform is messing up with me, so it might take me a second or two to put everything in order. Anyway, so I will be talking about United States dollar, Swedish krona, and a possible positive surprise trading strategy. So what you're seeing now is United States dollar Swedish krona 1 minute chart. Let me zoom in a little bit, making it more noticeable and simple. As you can see, at the moment it's actually trading around the 200-day simple moving average, and in the past 5 to 6 minutes we saw a rather in comparison substantial negative reaction. So might be that this data coming out and finding a way, which the Dog Down mentioned, might be taking place at the moment. Well, took place. So I know I will reserve the right not to comment about that further, but I would say this move seemed a little bit out of the ordinary. So yeah, this trading strategy itself, and mainly the pair was chosen due to the fact that currently 71% of traders are already long on the pair, so expected further appreciation. I can't really say further, but appreciation of the pair. And technicals, you can see that we're having rather mixed signals in both of the areas, in the trend indicators and the indicators which predict turning points, right? So just to be clear, you can see well, United States dollar Swedish krona is actually keen to have a rather substantial move, and you can see, for example, a sort of average normal move in 1 minute could lead up to 20 plus pips. So possible trading strategy would actually include, if we take into account, let's say, something medium target, taking into account where they are located, is stop loss, well, being buying at the market, stop loss being located at the daily R1, with the 20-day simple moving average being just slightly below it, and that would constitute for, let me now see, I guess something close to 50 to 70 pips from the current market, yeah, 55 pips from the current market price, and take profit for the medium term. I would say up to 5 to 10 minutes after the release of the data would be at the daily R2, which is located at 6.55576, and that would be 140 pips around the current market price. So 4 times the expected normal 1 minute movement, and two times below the current market price would be stop loss. Of course, for those indicated, let's say, in the more immediate reaction in the first minute, I guess it would be possible to set, let's say, if we take into account the current, if we take 200-day simple moving average as a reference point, we could take profit at the recent low, or recent high, sort of, which kept the pair at the base since, which kept the pair depressed since for the past, what now, 40 minutes, which will be at 6.5496. So I guess, if you wouldn't mind, I will indicate this somehow in orange color or similar, and the stop loss being maybe a little bit this arbitrary number of 6.54, right around here. Also, let me put it orange color. So yeah, as you can see, it's actually being rather volatile as expected and trading around the 200-day simple moving average. So I'm pretty sure we'll see a substantial move despite the which side it will go. So yeah, that being said, from my side, I guess I would like to give the floor to my colleague Alexander, which is not connected, apparently. So okay, I will continue to talk then. Right, so yeah, if Alexander in case doesn't connect, then I guess it would be fair to say that for those who expect the data come out with the more or less worse than expected, although it's already showing the negative side and trending lower, actually could just put vice versa. Okay, I will give Alexander right over here.
Okay. Hello guys, so sorry for this technical issues. Let me just find my slides here. So yeah, here we go. And I will use Thomas screen sharing as well. Hope he doesn't mind. So the negative surprise trading strategy is based on gold and greenback currency pair, and in case we'll see some worse than expected data, then the pair has a great potential to appreciate. So the greenback will lose some ground versus the gold. Yep, and currently, as you can see, the pair has been highly volatile. Yep, and currently it's trading at 12.21. Yep, and it almost has reached a recent high. So the potential negative surprise trading strategy is to enter at the market price and to place the potential take profit. Let me just find this level. So that will be on 12.33.48. So right over here. While the stop loss can be placed at 12.21.41. Sorry. Let me just find this level, and that's already even lower than we can currently see, 21.41. Yep, and if I recall correctly, that will be a weekly S1, so quite a significant support. Yep, and regarding pips, the take profit is placed. Okay, even only in case Thomas platform will be working. Okay, so never mind. Just speaking about the market sentiment, it's currently strongly bullish as almost 63% of traders are holding long positions on the pair. Meanwhile, the greenback is bought in 53% of all cases, while gold is also bought in 63% of all cases across the board. Speaking about the pending orders, in case the uptrend will persist, then almost 58% of pending orders are ready to provide some additional support for bulls, as the mentioned percentage of orders are placed to buy the pair. Okay, so and by the way, as you can see, other market participants also suggest further appreciation of the pair, as almost 66% of traders, of London traders, are holding long positions on the pair. And the similar situation we are seeing at daily fixed traders, as 64% of traders are holding long positions. Meanwhile, aggregate indicators are sending buy signals only on a short frame, as 10-minute chart, and also on the daily chart as well. So in a short and long term, the pair can appreciate. So I see the data has come out, and we see stronger than expected data. 238,000. So I guess we need to switch to Thomas chart, and that will be understood lower and Swedish krona, so the pair has almost reached the planned take profit, and it's just a couple of pips left. To be more precise, that's 17 pips until the take profit, and the pair has reached the 200-minute simple moving average, by the way. So, yep, and the take profit is almost reached, so just a couple of pips left. So once again, in case we are having stronger than expected data, then the greenback will appreciate for some time, including United States dollar and Swedish krona, sorry, currency pair. So the planned trading strategy works very well, and I hope that was useful for some of you. So, yep, I'm giving the floor back to Paulina.
Yes, thank you guys. Alex, Thomas, you just like spiced up the news release by changing places. It's like a freaky Wednesday. And yes, that was kind of it about our news release. So Dow, any thoughts, comments? I was like, wow on the numbers, really. Doc, I can hear you. No, it's not. It shows me that it's off.
There we go. How's that? There we are.
Yeah, perfect.
Some of the numbers, you know, with even a little revision from last month, very impressive numbers. Some of the good numbers that I liked seeing was in manufacturing and in the financial industry and the service industry. I saw a real, you know, kind of a good spread across. It was some very positive job growth. So the number was better than expected, and so it's one of the first times I've seen in a long time that actually says, hey, maybe the economy is getting better. That's the way I viewed it. I thought this is the first time I've seen something positive. Now, you know, if it holds up for the next couple months, that'll be really positive. The last month, the employment numbers reflected more of government jobs being created more than private sector. This time around, it showed a lot of private sector jobs being created. So that's really positive, and that's the type of stuff that we need to see to you know, put confidence into the bond markets, the equity markets, and so forth. So I think that's a positive, and obviously they all trickle down into the currency market because money will run to the best return, and that means people reach for the currency of that particular country and make it move for the better or the worse. So that's all I have for it at the moment. It does say the small business payrolls were up 108,000 in December too, which is another real positive number. But overall, I thought the internal numbers looked really positive.
Yeah,
so thank you, Paulina.
Oh, thank you, Doctor. And as you said, I agree, and I like those you know, good beginnings, a new year, good data. Optimism, that's good.
Yeah, it's a good start. Exactly. It's a good start because we haven't seen very positive numbers for a while now, you know.
Yeah, that like makes hope for us. Okay, so back to your webinar, and thank you once again,
Thank you very much.